RBI cutting rates have increased after the spike in IIP and consumer inflation. What are your expectations of the RBI's policy review next week?
Well, we certainly have a 1/4 percentage point rate cut penciled in, subject, of course, to what happens on WPI inflation. The critical issue is that the IP number, while being better than expected, does not really indicate any kind of an upturn. All it's indicating is still very much an ongoing consolidation at a low level. In particular, February industrial production will actually slip back to show a growth of just 1/2 percentage point. So I don't think the IP numbers are going to impact RBI's thinking. Consumer price inflation, while a fair point, bear in mind RBI over the past several months has been cutting interest rates despite CPI inflation having risen. Part of this reason is RBI's own, in my opinion, misguided focus on WPI rather than CPI, which is why the WPI outcome this afternoon holds the main key. And as long as it's on expected lines, we should see RBI come through with a rate cut, especially after what we've seen effort on the fiscal front in recent months.
You've been saying that India needs tighter fiscal policy and easier monetary policy. What sort of a rate cut are you expecting?
Well, that remains to be seen how constructive is on the fiscal front. The finance minister has got off to a good start. I think the important thing on the budget really is whether he can maintain the delivery over the course of this year. It should not be a paper tiger. There are certain areas of concern as far as the budget arithmetic is concerned, and the quality of fiscal correction is rather poor because it's heavily dependent on one-off items, spectrum sale and divestment. These are things that RBI should not necessarily ignore because bear in mind fiscal correction is not just going to be a one-time affair for India. It has to be a multi-year process. And for the central bank to feel comfortable about a sustained reduction in rates, it has to feel fairly confident about delivery on the fiscal front.
We are seeing some kind of disconnect. On one hand, RBI has been easing rates while local banks have been hiking deposit rates. How do you read this?
Well, I mean, the hikes in deposit rates have not been necessarily across the board, so I wouldn't necessarily use the same brush for the whole banking sector. It is true that liquidity shortfall have actually prevented adequate transmission of RBI's own policy. But bear in mind, interestingly enough, part of the reason why domestic liquidity is tight is because the government has not been spending. If you look at the cash balance that the government maintains with the RBI, that's pretty high, anything between 700 to 900 billion rupees, and that is actually constraining ongoing liquidity. Later this month, we'll also have a negative impact coming through from the advance tax outflow that happens on a quarterly basis. So I think broader liquidity conditions should improve at least incrementally at the beginning of the year. That's typically beginning of the new fiscal year. That's typically when government spending also picks up.
Despite the reform momentum, we have not seen any pickup in investment cycle. How confident are you of stalled projects kickstarting with policy initiatives?
Well, there are two separate issues here. I think reform is a heavily abused word in India. I mean, it's almost as if bureaucrats show up to work, that is treated as a reform as well. I think the government has rightly, even if it was long overdue, undertaken many relevant decisions, some of them politically tough decisions, and it should get a lot of credit for that. But path-breaking reforms are not really that are happening. That would certainly suggest that yes, there's a tectonic shift as far as the broader growth profile is concerned. We are still waiting for those. On the investment side, I think the ball is very much in the government's court. Interest rate cuts are going to not have a huge impact, but any kind of quick moves from the government to get some of the stalled projects going will have a meaningful impact. And there, I think expectations are still ahead of what the on-the-ground reality is.